Marike just built a really good segue to the last panel saying we are being squashed. And I'm certain that this will be discussed by the last panel of today. Please welcome with me Executive Director at the Digital Euro Association, Anne-Sophie Kappel, and her panelist, Anne-Sophie Kappel. We have two Anne-Sophies, that was my bad. Please welcome Anne-Sophie Kappel and her esteemed panelists on the topic of geopolitics and digital money as a closer.
Thank you, everyone, for still being here. I know it's late. Either this was what you're waiting for, or you're just tired and don't want to talk anymore. In any case, we'll try and make it worth your while. We heard it's wartime. I think geopolitics is right on top of what we just discussed. We're going to neatly fit into that. Joining me on stage, I will let you guys introduce yourselves. I'm very happy to have you all. Please, Menno, take it away.
Sure, I'm Menno Broos. I'm the project lead for Digital Euro at the Dutch Central Bank.
Hello, I'm Ruben de Beerst. I'm a partner at Senacor.
Hi, everyone. I'm Sonia Davidovich, Senior Digital Currency Expert at the International Monetary Fund.
Hello, and I'm Martin Hallen, working as a director at the Bertelsmann Stiftung on technological sovereignty and resilience in Europe.
Wonderful. So to sort of build on what was just said, and throughout the day, honestly, we know that we're living in a time where money is not just issued. We're talking about distribution, governance, access to infrastructures, all of this. So this occurs across multiple different layers. It's not necessarily a bad thing that we have multiple solutions, multiple providers. Comparative advantage is a good thing. That's how economics also work. The problem is when interdependence turns into dependency, and when dependency becomes a strategic problem. So that's what we're here to discuss today. When Europe is facing a strategic problem, at what point does that come in? We've heard China is weaponizing their CBDC or other ways of doing that. The US is replacing their petrodollar with stable coins. Big tech is willing to distribute that. So it's really about when who controls the choke points, let's say, in money and payments, and when does that turn hostile when politics come into play. So besides the rhetoric on strategic autonomy, let's strip away the policy language and all of that and really look at sort of like what the real problem is that Europe is trying to solve here. Martin, if you take away all that language, all the rhetoric around strategic autonomy, what is the vulnerability we're talking about? Is this digital dollarization? Is it market concentration? What is it?
I try not to leave too many with nightmares tonight when you go back after the setting of the event. No, I think if we take it all, basically the core, it's linked to the last points made at the digital money stack discussion. The digital money stack is based on a technological stack and in types of geopolitical volatility. Just yesterday, a study came out that we now have 56% globally of authoritarian regimes instead of democracies, and a transactionality that we are not familiar with in Europe. Suddenly, everything that we believed was basically infrastructure that was enabling us to generate value becomes a coercion tool and becomes a tool of dependency. And of course, many of the asset holders and also the financial or the insurance ecosystem are familiar with traditional ways of coercion. I mean, we are seeing this play out during the Iran crisis at the moment, where, of course, in the past we were worried about Putin turning off the gas. Now the LNG discussion starts also coming from the US that maybe the shipments won't be coming on time. And in the digital stack, we have a similar story. We're not looking at sanctioning of actual regulators we have in Europe or former regulators. We're looking at very concrete coercion. And for those of us who openly read what is being put out there currently, not only by the Chinese government, but also by the US government with the new cyber strategy, for example, we have to be very aware that the notion of Europe being squashed, if we don't play our cards now right and strategize with a clear vision of what we actually want to build on top of, a stack that we also own, then we have big problems. So there's hope. I maybe mentioned this in some later points, but we need to be very aware that indeed it's quite an urgent situation.
Yeah, I think political coercion, we all know this, we've seen it in energy, in trade, we're seeing it right now. Money and payments obviously affects all of that, right? It touches all of these areas. Maybe Sonia, from a global perspective, do you therefore believe that the European concern here is well-founded or maybe a bit overstated? Which one?
Well, I'll let others be the judge of, because that's a very subjective assessment, whether it's, I bet everyone in the room will have a different opinion about it. But maybe from my vantage point, like working with the global membership that the IMF has, I do think that Europe can be looking at selective strategic autonomy. That's what I would say, because it is not conceivable that Europe will be able to completely divest and be completely autonomous of existing global structures. I mean, we're talking about, I heard a presentation about European cloud providers. I mean, let's face it, they're only 15% of the total market. The rest, the overwhelming rest of 70% or more, are actually the hyperscalers. And that's not going away simply because it's such a resource and capital intensive infrastructure that requires a lot of upfront capital investment. So I don't think that we will see a future, at least not in the medium term, where you will have like Europeans will be able to catch up with those hyperscalers. What is more conceivable, I would say, is that you will have like for resource or compute intensive applications such as AI, that you will have a hybrid model of foreign and European providers, and that Europe safeguards like the critical pieces of the infrastructure that are more sensitive, so like security, defense, like digital identity, for instance. This is where Europe can actually impose rules, even in a hybrid cloud model or like a hybrid infrastructure model. Europe can dictate what the rules of engagement are in such structures. So I caution everyone, and it's also not conceivable that there will be like a complete AI stack, or that we will be completely, and this is what the panel actually before us said, they will be completely, or Europeans will be completely able to detach from software solutions or the ecosystem more broadly that technology providers across the globe typically collaborate, especially for public structures, public chains and such. So I think that it's better to think about what are the areas that are critical, that are sensitive for Europe, and then focus on those. How can we safeguard those critical areas that matter to Europe, and try to regulate or impose rules on those hybrid models that will emerge as a potential solution? Because, as I said, I don't think that there will, like, at least in the near future, be a European hyperscaler that just like takes up the vast majority of the market share for compute-intensive applications.
So you don't necessarily view dependency as a weakness?
No, I don't actually. I do believe that the codependency that might exist and that might scare people and frighten them is actually not a bad thing, because you're using the competitive advantage that you have and you're collaborating to create something that's much more resilient and much more scalable than if you were to do it alone. Because I just don't believe that, I mean, just like all of us, right? Like, why do we need to work in teams? Simply because all of us like bring something to the table that is of value for the project, for the product that we're building, right? And so such is the case for any infrastructure or a solution that we're trying to build at the European level. Let's leverage what others have already built instead of reinventing the wheel and trying to replicate the same thing with less resources, less manpower, less time, if we're talking about time pressures, and try to just identify the areas where we want to be in control and protect those, so that we don't feel like there's infringement on like what really matters, what really is important to the European sovereignty, digital sovereignty.
I see Ruben nodding his head along already. Do you think that the same thing applies? Do you think that dependency is not necessarily a problem unless it's not well managed?
Well, I would agree with you that it would be difficult to build a European hyperscaler from now to tomorrow or something, and I also agree that we don't have to do that, because like the US hyperscalers do have a lot of services that we actually will not use, for example, for a digital euro. So if you mentioned AI, for example, and other compute-intensive services, I wouldn't talk about that we need that as a European hyperscaler, and that we should invest on that. So, but on the other hand, if we talk about payments and about the infrastructure that we have for payments, then a dependency becomes real at some point, and there is where you, of course, can build on European infrastructure.
Menno, then turning to you in terms of infrastructure and control of infrastructure, controlling monetary flows, where do you see the strategic problem or risk arise most prominently?
So I like the thinking about codependencies, and that some things we shouldn't probably do ourselves. Just like I don't see the US produce good wines in the near future. Or chip machines. No, but this codependency is fine in many areas, and has always worked, and doesn't change with just one president in the White House. But I think the dependency in payments is particularly big, and there from our mandate, from the central bank mandate in safeguarding efficient payment systems, I think we've seen early on that the money that we issue, the public money, banknotes, is being used less and less. And then if you add to that in the digital realm, at least in the card business, you are very dependent on the US, and obviously that becomes an issue, not only for central banks but for regulators, that you do have to solve. So yes, you cannot solve everything. I mean, we cannot also solve the cloud by ourselves, but payments in particular is something where I think we should just assume that MasterCard has a kill switch, and we need options to circumvent those.
Yeah, but then another dependency that comes to mind, right? Semiconductors, right? Like no matter what area we're talking about, like semiconductors is like huge dependency on Asia and the US. So what are we going to do about that? Like nobody can tell me that we can think seriously about payments if we're not considering the dependency on semiconductors. Like forget about the cloud for the moment. You could say like, oh, we're just going to run our own data centers. We're just going to keep it all on-prem. Fine, you can do that. It's not impossible. Like it might be that you're running like huge data centers and you're keeping a tight grip on it. But then when it comes to semiconductors, you again have a dependency that you just cannot wish away. So instead of trying so hard to, again, like I'm repeating myself, but it's much more better time spent on thinking about what are the most critical and sensitive elements of my infrastructure. In payments, for instance, digital identity, the European, and I really applaud the EU for launching, come January 2nd, the digital identity system. That is one where I would think like, oh, let me see how I can like protect that from infringement, foreign influence, because like, no matter what we discuss, like we can find a dependency, and we're not going to be able to just say like, oh, we can control that fully within our own borders. It's just inconceivable. The moment also you connect your payment systems to a foreign jurisdiction, or you have vendors that work with other vendors abroad. You see what I mean? Like we can spin this any way we want. We're going to be identifying a dependency on a foreign jurisdiction, on a foreign company, and there's like no risk management framework of this world can help you eliminate that dependency. So rather than trying to eliminate it, see how you can integrate it, see how you can mitigate the risks that come from third parties that are outside of your jurisdiction to the best of your ability. Obviously, not all risks can be mitigated or managed. When they happen, how do you deal with them, right? So those are the kind of things where the energy is better spent on thinking about than trying to just eradicate all the dependencies that exist. I know that that's not the view of this panel, but I'm just saying like think about more critically what really matters to me and focus your energy on that.
I think to each their own view, right? And we're also in Europe, we're facing a bit of a tension between we want openness and resilience. We want global interoperability, but we want a sovereign fallback in case fragmentation increases, right? I think, Martin, you wanted to say something about what Sonia said.
I try to be provocative, but at the same
Please.
time respect also the
Wake
positions.
everybody up.
So I do think we have to ask ourselves also a question whether or not dependency is something that's actually beneficial if there's a massive power asymmetry. And then you're very suddenly in a situation where you have to shift your own kind of paradigm of saying, if this is dependency, isn't it much rather something where I have to learn the language of power and making myself indispensable? And then very quickly, in geopolitical terms, you're ending up, from a European point of view, saying, what are the other counterparts that I'm very dependent on me? In Europe's case, in the US case, insulin. If we were to close this tomorrow, then suddenly you would have a massive thing. Should we do this? I'm not advocating for that. But I think this is the language of the times that we need to start learning. And one thing I also want to put in here, because without criticizing what I think is a legitimate concern of not being able to reduce all of those dependencies overnight, because it's a complex, very difficult situation that Europe has found itself in. But it's also recognizing that we're repeating ever and ever again, from a technological point of view, an innovation paradigm that we all grew up with and that we've been socialized with. Around Silicon Valley, the hyperscaler model, fast to market, break things, let's go, vertically integrate everything, without having ever considered that this will be politically linked to a very transactional regime that right now is standing against a lot of the core values that we hold dear in Europe and that are in danger. Without being ideological, it's just a fact from the evidence that we are observing. And this being said, where does this lead us? So basically, it goes back to this point that was made in the previous panel of what is the vision, technologically speaking, of where this technology serves our societies, our way of life, and not the other way around, and then to retro-engineer steps where we believe there are pain points that we should actually protect very clearly. And we see a lot of reactiveness that, in my mind, is role-playing as proactive strategy. That's a big problem that we're currently having. And lots of the points I've heard in the afternoon today here, I think you share this concern that there are no overarching holistic strategies there. And I do think that we need this proactive strategy and also link it then to some core principles that I've heard here as well around interoperability, open source, and instead of maybe being first to market, being first to be trusted in very volatile geopolitical times where we have an actual moat around that and to play that out also very clearly. And very last point also here, I do think that it's very, very essential to make sure that this codependency situation that you described rightly so at the beginning is not something that we try to actually play around with because we are not courageous enough to maybe also face some hard-earned truths that the paradigm that we lived through right now and that we used to extrapolate maybe into the future of how we actually strategize is no longer working, and that we actually completely rethink how Europe could actually use its assets in a way that is way more strategic. A little rant.
Maybe just directly to that. I was hoping it would be more provocative, but okay. I'll take it. We still have 20 minutes, so.
I'm just warming up.
I know, right? Just getting started here. I just wanted to say that, yes, you're right. Like, Europe shouldn't be hiding behind the veil of like, oh, codependency, we should just do our own thing. But like one competitive advantage, if I may say, that Europe has compared to other countries when it comes to stablecoins, for instance, digital assets in general, is MiCA, that many countries look up to as a blueprint of something of their own regulatory frameworks that they want to set up, right? So that's something that Europe can pride themselves on. It might not be the best regulatory framework that exists out there, and certainly, it has to stand the test of time. And Ulrich mentioned just earlier today that if you want to achieve that strategic autonomy as a country, you need to make sure that even that regulatory framework that everyone looks up to is flexible enough that it allows for innovation, it allows for mistakes. I mean, beautiful things have happened out of mistakes. Grand innovations have happened out of mistakes. So there has to be enough foresight. I know it's very difficult from a regulatory standpoint because the ultimate goal is to protect the consumer, protect the investor. But there has to be a safe space for mistakes to happen where Europe can explore and European companies can explore, like, oh, what about this euro-denominated stablecoins? Like, I found this perfect use case and I want to test it out. And there are many like sandbox models or innovation offices or what have you. It doesn't have to be like, I don't know how fancy, but like just creating this safe space where companies can, you know, explore what it is, the use case or the problem they're trying to solve through a particular solution, is something that is critical if we're talking about strategic autonomy. And that is something that, you know, where despite the fact that MiCA can be considered a competitive advantage that Europe has over other countries, but are there any gaps or are there any changes that are required to that regulatory framework to produce that enabling environment for innovation to thrive, for mistakes to happen and to like learn out of them and build a better, more sustainable, robust future for European digital asset systems, payment systems in general?
I think what you say, right? We have space. We should have space to innovate and to try things. Europe is trying out sandboxes or I think pilots to production. We've had panels on this today. We all know that at least there is some effort made in that respect. There is a lot of initiatives actually at the European level. We all know that. One of the most prominent ones is the digital euro, right? The question is whether all these initiatives, do they add up to a coherent strategy, or are we sort of looking to solve pieces of a puzzle without a clear priority? So the euro system has set one clear priority, that is the digital euro. Rather than being quite general about this, we heard Ulrich Binzel say that digital euro, yes, is a good thing, and we want the digital euro, but not along the lines of what Navarrete says. So that's the digital euro rapporteur at the European Parliament. So, Menno, turning to you, obviously I'm already staring at you. What does that mean to you? Do you think that an offline first digital euro or offline only digital euro would actually address the autonomy gap that we're perceiving here? And for that matter, would an online digital euro do that?
Well, like we said, there are so many gaps to fill. So you have to really look at what is most prominent now and most urgent. I do think that from my perspective, I'd say something resilient that works also if other systems are down is necessary. And then in the short term, that will likely be the offline digital euro because that would also work without internet connection. So that adds resilience to an economy and to a payment system where we currently have cash, at least in Germany. But in the Netherlands, that's much less and less a resilience option. So it really depends on which gap you want to fill. I think if you look at a more strategic level and you look at because we're quite negative about Europe, but if you look at our strong points, it's SEPA and it's our account-to-account rails where we are much more efficient than the US and much better for consumers. So if the digital euro could also be an instrument to promote a SEPA for cards in a way, I think then you can really fill a lot of gaps at the same time. So that's not necessarily now on the table, because I think the regulator still has to decide on whether we have one full package or whether we go for an offline versus an online digital euro. But you hear in Brussels a lot about interoperability, and you hear a lot about what problem is the digital euro trying to solve. And I think it's really up to the regulator to now come with this coherent strategy that I've heard also in this panel. And the euro system will make sure that we provide the infrastructure that fits into that strategy. I think that's what we have promised early on.
Certainly, I think that is what has been promised. Ruben, do you also think if Europe had to build one thing concretely to turn the whole strategy for strategic autonomy from, like, beyond, make it more than a political discussion, what do you think it has to build? An infrastructure or something else?
So if we look at the payment methods that you have in Europe, so there are a lot of local solutions that we already have, but always when it comes to cross-border, we are dependent on US alternatives most of the time. And so the problem that we have here is that it's really fragmented within the European countries, and each of the local solutions, there is no incentive to make it a European product. And so when you look at the last years, there's never been like a real European scale project. Like Wero is like the first initiative that goes into that direction. And I think what you really need to bring the solutions together is to have like on the banking side that you have like one similar API into the banking sites, let's say, something like that, and that you can build really a payment product on top of that that is European scale. So this is what I think what is still missing, so that you can really have a European payment product at the end. So
maybe just to add that this is a phenomenal opportunity for Europe to leverage the digital euro, the digital identity system that's coming online, TIPS. Like these are all elements of a digital public infrastructure, similar to what the India stack is, nothing but that. Aadhaar, the identity system, UPI payment system, and a digital rupee. So sky is the limit in terms of what you can do once you have such a DPI in place. And they're actually exporting that model to the rest of the world. There are countries that are implementing the India stack within their economies. And I think that's very, very powerful. The previous panel talked about, sounded like a war zone a little bit. And I'm just not a big fan of that kind of rhetoric, because it immediately it adds it drives a wedge in between countries, and it's very very reactive, driven by events. I think you mentioned the political regime. That should be completely independent of that. Why we're talking about strategic vision for the medium term, long term. So that is completely independent of any of the distractions that are happening now. I'm calling them distractions. It's probably for some people much more than that. I get that. In the current moment it is, but what I'm trying to say, use the opportunity of building the core elements of a DPI, of a digital public infrastructure, and try to see whether there are other takers globally that might implement such a system. It's a unique opportunity that Europe could leverage to its advantage. So a little bit of competition it's a good thing.
Martin, I saw you.
I think I'll try to connect to that. I agree with you on the point that Europe should not try to outcompete big tech everywhere, but we need to be much smarter and much more subversive in kind of setting incentives for the rails that they might actually be working on. And there are ways of doing so. The financial sector is one particular one. In the health sector, we have other alternatives. Defense, by the way, also a very interesting use case for that. But I think what we also need to make clear, and that's the distinction to the India stack, for example. I'm one of the co-authors of an influential study around the Euro stack last year, and we made a very specific case that the DPI approach of India is not the template that can be used based on European fundamental values and principles because of the coercion and oppression risk that comes with these systems, even in India with the Hindu movements that we have there. So we have a fascinating use case with the Aadhaar system, the identity system, with the data spaces, with the payment mechanics that are there, and I negotiated also with delegations that came to Brussels in this regard. Fascinating use cases, very different approach in Europe that we're currently investigating. And it's much more, again, a question, how can Europe build its rails, its digital infrastructure that is much wider than DPI to actually enable wealth generation also on the continent with meaningful strategic partnerships, not as an exercise of isolationism or protectionism, but actually as an invitation for cooperation around something that might be a third way, because we don't want to choose between what currently seem to be two paradigms that we see as very dangerous, because they might squash actually the way of life and also our industries as we are talking about them. And where does this lead us? I mean, maybe I take one Indian approach that I like much more than the DPI approach that they've taken, is what they've done in the 70s and 80s around generica in the pharmaceutical industry. What is the technological generica of good enough that we might need in some sways of our industries so that we at least have something to offer? And at the same time, also what can be done by incentivizing also from a policy point of view, but also from an economic point of view, what we actually currently are perceiving as a hindrance, which is our decentralization, which is our kind of splintered ecosystems, and underline that actually by making them interoperable, by using the standards in highly regulated environments like the financial industry to build alternatives to a hyperscaler approach. And this is something that, when you look at it from a cyber point of view, in times of global conflict, has way less attack vectors than centralized hyperscaler models, which we are seeing in times of drone attacks on AWS data centers directly in the Gulf just a few weeks ago, are true alternatives. So those are the approaches we have to do, and those are approaches that are not something that resembles what we are used to. Those are approaches that work with data stewardship, with interoperability standards, with also ecosystems that need to be built, and a clear public but also industry responsibility to build these guardrails that then can actually have a fighting shot. And in some areas, and I finish with that, like the financial, insurance industry, health industry, there are ways of doing this relatively swiftly. And again, the window to enable that is very short, because the politicians are desperate for political wins. That's one thing. And again, I have to say it out loud, the coercion and also the very transactional reactions behind the scenes in the tech sphere, unfortunately, are running contrary to many of the arguments that you made, because they're extremely dangerous at the moment for democratic structures and the electoral process for us to actually keep our systems running.
I have to say, now we're getting somewhere with the provocations. I like it. Let's keep that up. I just wanted to say that I don't think that it's coercive to say, like, hey, we build a really robust and viable infrastructure. Here's how you can build one yourself based on using the blueprint that exists. I don't think anyone is out there saying you have to use this and it has to be exactly like that and you have to use the vendors that I prescribe. At least that is not the case that we're seeing for countries that have adopted the India stack. But again, as I said, competition is good. So why can't there be an India stack, a Euro stack, a Kazakhstan stack? I don't know, like other countries that are building their own stacks. So for countries that do not have the resources or the strategic vision to build their own, can then replicate what others have already produced, and they can choose from a variety of solutions that are most suitable for their specific context. And this is where, and I think that when we speak about coercion, it means that these countries are imposing the exact same solution as an exact replica to their country context, and that just doesn't work. And I don't think that that is the idea behind countries deploying something along the lines of the India stack in their countries. They're just happy that they have a blueprint to work with. They're extremely grateful, and I don't think that the logic behind deploying, or at least from India's vantage point, I mean, I can't speak on behalf of the country, but there's no such thing as like forcing that country to use a specific technology provider or use a specific solution and like that way allow like some form of coercion later down the line. It's more about like, hey, we genuinely want to help you achieve something within your jurisdiction, and here's how you can do it, more as a blueprint rather than like a one-to-one carbon copy of the infrastructure.
But I don't think you're necessarily disagreeing, right? I think maybe the
just trying to
phrasing
make
is
it
a bit
amusing.
different.
It's the last
Fundamentally,
panel.
you're agreeing, right? It's actually just a wording thing. It's also mainly whether we should focus on outcomes, essentially. We shouldn't focus on like centralizing control, whichever way that might look like. I'm sure from a central bank perspective, actually, I think you would agree with me that it should be about outcome and not control. But please feel free to jump in there, Menno, if you do disagree.
Well, you should look at the network as such, and you don't have to control the whole network, but you have to look at the dependencies specifically in that network and where you don't have the control. And I think there in payments, it's very clear that no single country controls the card networks. And there is a global standard, but it's really to the benefit of a few big tech companies. So I think there you could team up, and if we get to a European standard at the POS, at the point of sale, maybe that could be a blueprint also for other countries. So in that sense, I think countries can learn from each other. Yeah.
I do think that countries look to Europe for some guidance and to see how things can work as well. Regulation, MiCA is also a prime example of this, right? What then is actually missing here? What's the gap why are we having this gap? What can we do to actually fill this gap in practical terms? Maybe Ruben, you want to jump in terms of implementation. What can we implement?
So I think to solve this, like for the point of sale example, if we stay there, so the current problem is the fragmentation across Europe, I would say, and to have really a product that works at point of sale. I think there are three things that you need. The first is the integration into the banking sphere has to be like standardized across the countries, because we see like local solutions in each of the countries which are very popular and work, but they never work at European scale. So we have to have a standard on that side. That's one. The second is if you just have the APIs that are there, just a regulation, then you have nothing. The second thing that you need is a product on top, because otherwise nobody's using it. So you need like that hasn't to be one brand, but at least it has to be a similar working product that works for if I go to France or to the Netherlands or whatever, that always works. So it needs to be like some kind of unified product. That's the second thing. And third, what I would also agree is with the innovation that you would have, you need partnerships, public-private partnerships in order to build on what we already have, and also to have opportunities for more innovation.
Say Europe gets this right. Say we manage this. Who wins and who loses? Open to anybody, but feel free.
Well, I think consumers can win and merchants can win. And they're on the same side of the coin in a way. So that will be very helpful. I think geopolitically Europe can win as well. We don't solve the whole coercion problem, but at least a part of it. I'm not sure. I think it would also benefit incumbent European financial institutions, but it could also benefit neobanks and other players. So there, of course, it's really up to the market to decide who can win from this.
Martin, do you think the euro could be winning here?
I do think so. I do think so, because especially when you talk to institutional investors outside of Europe, they're quite bullish. But they're also wondering what Europe is doing at the moment and not getting its act together, of actually playing out this strength and also talking, again, the language of power. To a certain extent, a ruthlessness also of knowing what the priorities are that need to be set, but also a mindset that underlines that we're not starting from scratch here at all. While there are dependencies and layers of the stack that are pretty brutal, there are opportunities in others. And again, to not be too lazy and fall into false dichotomies of deregulating for the sake of innovation, but much rather anticipating what the next innovation cycle 5, 6, 7 years in the future will be, and to double down on that. And geopolitically, the world will be volatile to the extent that we've never experienced. Our grandparents have experienced that. Maybe in some regions, our parents have experienced that. But this is something that will happen, and how can Europe position itself in its financial system to have this type of resilience, but also in the debate around European champions or those partnerships or those structures we want to build. And while I don't believe that there will be a European OpenAI or European big tech, I'm convinced that if we play our cards right, there will be champions with a big European imprint on interoperability standards. There will be champions of migrating from legacy systems to new systems and making them weave together to actually be competing with the entities that today we think are completely not something we could compete with. And this has still to come. It's a mental shift, it's a mind change shift, but also it's a narrative challenge, I think, for us to leave the reactiveness of like, oh, let's adapt and let's see, how we can do it, to this more bold stance like, okay, wow, this is so much uncertainty. Let's try something out of, our comfort zone, and especially in sectors that are highly regulated, that have an incentive to make that happen because they're actually monetary values to be made, and in my deep conviction around trust and trust assets, huge markets to be opened that Europe could actually single-handedly also control.
I will give everybody an opportunity to ask questions now because we have 1 minute left, and I'll give it to you since you powered through with us all the way to the end. Any takers? Any online questions?
Not as of right now.
Okay, then actually, before we start open another kind of worms, I can ask about capital investments there and what the market will look like in a few years. Let's just leave it at this. Everybody can keep talking about this afterwards. Anyway, thank you everyone so much. Thank you as well. So I think, yeah, I'll hand over to Jonas again.
Thank you.
Yeah, thank you, dear panelists. Just very briefly before I hand over to Jonas, I wanted to personally express my sincere gratitude for everyone who was a part of today's event, to, of course, the audience, to the team that made all of this possible, of course, up there, the tech guys, the invisible guys of making everything possible right here. I think it was very smooth. I learned a lot, and I am humbled by how excellent everything went. I'm truly grateful to be part of this. Thank you all. And Jonas, you can be proud. I hand over to you for closing remarks.